Welcome to today's market report. The pan-European stock 600 index rose 0.2% to 445.10 points, just below its record high of 446.19 points. Trading activity was subdued with markets in Austria, Denmark, Hungary, Norway, Switzerland and Germany closed for holiday. UK Cineworld Group plc rose 2.8% after animated adventure comedy Peter Rabbit 2 pulled in more people than expected after a month-long COVID-19 lockdown. Helping the sentiment, European Central Bank President Christine Lagarde said on Friday it was still too early to discuss policy after the end of its €1.85 trillion emergency bond purchase scheme, dismissing calls by some colleagues to consider tapering. The central bank is set to meet early next month to discuss its policy. With an economy only now rebounding, it is early days in anticipating an transition out of crisis mode for the ECB, but a necessary note. The Stoxx 600 ended the week marginally high on Friday, despite worries about inflation, as a survey showed Eurozone business growth accelerated at its fastest pace in over 3 years in May. There were some concerns as Germany's Public Health Institute declared Britain and Northern Ireland a virus variant region, requiring anyone entering the country from the United Kingdom to quarantine for 2 weeks on arrival. Italy's FTSE MIB lagged as several stocks traded ex-dividend. Crude oil strengthened on Monday, helped by doubts of Iranian crude re-entering the market, as well as the continued reopening of US and European economies from the COVID-19 pandemic. The US crude futures traded 1.7% higher at $64.63 per barrel. Brent rose 1.6% to $67.38 per barrel. Gold futures was up 0.42% at $1,884.50 per ounce. On the FX front, the GBP-USD pair maintained its upward turn through the European session on Monday and was last seen hovering near the lower end of the daily trading range around 140-130 to 140-125 region. The pair extended the previous session's retracement slide from the 140-35 region or 3-year tops and witnesses some selling for the second consecutive session on Monday. In the absence of any fresh fundamental developments, fears over the long-term impact of Brexit and the economic damage from the pandemic acted as a headwind for the British pound. That said, a combination of factors helped limit any deeper losses for the GBP-USD pair. Investors remain optimistic about the UK economic outlook amid the impressive pace of coronavirus vaccinations and the easing of lockdown measures. According to the official data, more than 70% of adults have received their first dose, while some 22 million have received their second dose. This, along with the effectiveness of COVID-19 vaccines against the Indian variant, bodes well with the UK government's plan to end restrictions fully on 21st of June. On the other hand, the ongoing decline in the US Treasury bond yields kept the US dollar bulls on the defensive. Apart from this, the underlying bullish sentiment in the equity markets further acted as a headwind for the safe haven greenback. Even expectations that the Fed was set to start tapering its bond buying program sooner rather than later also did little to provide any respite to the US dollar. This was seen as another actor that helped limit losses for the GBP-USD pair. Eurodollar is paring back gains in the European session, having failed to find acceptance above 122. The major comes under fresh selling pressure as the US dollar stages a bounce across the board amid a caution tone seen in the European stocks. The dollar index recaptures 90, the figure, reversing a dip to 89.89. The main currency pair quickly fell to daily lows of 121.72 before recovering to 121.92, where it now wavers. Holiday-themed market conditions could likely to be the reason behind the whipsaw. The spot will continue to remain at the mercy of the US dollar price action and the broader market sentiment ahead of the Fed speak. From a near-term technical perspective, the spot turned south after facing rejection at 122.04, the conference of the 100 and the 50-hourly moving averages. The relative strength index takes a U-turn, now heading towards the midline, currently at 52.10, suggesting weakening upside bias. Dollar yen was at 108.81, whilst Aussie dollar was at 0.7737. With investors preoccupied with threats of accelerating inflation, US PCE data due on Friday is seen as one of the biggest tests for the markets this week. This is today's market news. Thanks for listening. We'll see you next time.